Morning. Welcome to the Brew Friday with Paulina. Today, Google and Antitrust, the best sectors of 2024, and the AI boom could be creating a little niche that we should know about. All this and more coming up after the bell. Here comes that music. Here it comes. Right?
Mm-hmm. Yep.
We're gonna get it so the end of it's gonna go even louder. We're gonna fade not out but fade in, I think.
I like it. I think it worked well this time.
Yeah, it was good. How are you?
I'm doing well. How are you?
I see you got my email about wearing a grayish blue top. Terrific.
Yep. I made sure to buy one over the weekend just to make sure I had it today.
Awesome. I love it. I love it. Cool. All right. Well, let's get to it because I know you're always pressed for a little bit of time. What time is it? We won't say the time, but we know we have time issues. All right. So first thing, Google and Antitrust sounds like someone wants to break them up because they're getting too big.
That's exactly it. Might as well just end the show now. That's all.
Okay.
That's all you need to know.
Let's move along. Okay. What's going on? Why do they want to do this? What's happening here?
Yes, so essentially this isn't the first time that we've seen the Department of Justice and the FTC go after big names like Google, Amazon, and Microsoft, a bunch of these big tech names. And specifically for the Alphabet parent, for Google, they have a couple antitrust trials going on. Mm-hmm. The latest update came from the Department of Justice saying that they want to essentially have a few remedies to address the antitrust issues that Google has. Mm-hmm. They issued this 32-page document that essentially said that the company could potentially sell off into different parts. They could sell off the Chrome, the Android section of the business, Google Play. And this sparked, investor worries, obviously, because there's a lot of uncertainty of what what an Alphabet would look like with separate parts. Mm-hmm. Google responded in a blog post to the DOJ's response saying that this breakup could negatively impact consumers. It could be a difficult issue for businesses and developers too. And they're arguing that dismantling these businesses could essentially decline the user experience and innovation at a time where artificial intelligence is something that all these big players need to participate in.
Right.
So
yeah, what's your probability of profit here that this happens? I don't think it's going to happen. Do you? I mean, is it a high probability? It doesn't seem like it yet. I don't know.
Right now, it doesn't seem like it's a short-term issue. Although different analysts on Wall Street have been gaming to try to see what a Google would look like if it were to be broken up.
Yep.
And if you think about it, Google's business is it's advertising business. That's where it gets majority of its revenue, but it also has a cloud business that's really strong. As well. So if you break up some of these businesses, they're like individual companies on their own. So hypothetically, if they were to break off, they would still be doing pretty well. So I don't think a risk of a breakup is high right now. So it's not really a short-term thing I think investors need to be concerned about.
Okay. Yeah, that's kind of how I feel too. All right. Interesting. I'll keep an eye on that one though, for sure. I wonder who would come into the search market. Well, they have ChatGPT, or do they own that too? No, they don't, right?
Microsoft has OpenAI's ChatGPT.
Yeah, forgot about that. Okay, cool. So market sector check. What do we like in 2024? What's kicking butt?
Yeah. So over the past month, it's no surprise that tech is one of the better performers. Over the past month, it's up 9.5%. And what drove that? Well, you had, of course, the Federal Reserve's rate cut in September that kind of was bullish for these high growth tech companies and large cap companies, because whenever you have lower rates, that means that debt is cheaper. And we know that these companies have been spending billions upon billions of dollars to try to build out AI infrastructure, training models, different things around innovation and so forth. But what might surprise you is some of the year-to-date performers, and particularly the best performer year-to-date hasn't been tech. It's been the utility sector. That is up 24% year-to-date.
Wow. That's a monster.
Yeah, that's pretty incredible. You would think it's tech, which is, I think, the third best performer. But utilities is up 24% because there's been a lot of investors. They're going into defensive mode, or they have been going into defensive mode, because utilities is kind of thought of like a sector where it's a safe haven.
Sure.
There during economic uncertainty. So given that the interest rate environment is coming down, usually that happens when the economy might not be in stable footing. So that's why you're seeing utility stocks performing.
Right. Who would be? What's a good example of a good utility stock? You know one off the top of your head?
That's a good question.
I might have to go to the Google machine. See, I use the Google machine.
Yeah.
All right,
I
so
would say
Next Era Energy, Exelon, Duke Energy. They call those public utilities. But yeah, you're right. They have performed well. Holy moly! Wow. Yeah, there's some good ones here.
Yeah, I would think of utilities as, like we said, defensive. If you think about different payments that are obviously consistent month over month related to, gas or energy and so forth, I believe those fall under.
Yeah, it looks like they do. I always thought these were just energy. I didn't know they were considered utilities as well. Like, so Next Extra, the Southern Company, Duke Energy, Constellation, PC&G, those kind of companies. So a lot of power. But these stocks are up just massively year to date. Wow.
Yeah.
Crazy, right? That's
incredible.
Yeah, good. Okay, I would never, if you gave me a multiple choice, I would have gotten that one wrong, I think. That's a good one. Okay, cool. The AI boom is creating a niche investment opportunity. What are we talking about here?
Yeah, so with the advent of artificial intelligence, obviously it's been going on for the past 2 years, and companies are investing billions to build out AI infrastructure. And it's creating an opportunity in the data cooling industry.
Data cooling?
Data cooling.
So yes. All those machines that are in those data centers need to be kept at optimal temperatures, right?
Absolutely, yeah. And they need to be kept at optimal temperatures because they need to operate efficiently. And if they get overheated, then there's too much energy being consumed, and the performance is not as strong as it would be otherwise. So this is creating an opportunity for companies that are in liquid cooling. So traditionally, cooling has been done through air conditioners, air vents, and so forth. But the GPUs, those graphic processing units, like the ones that NVIDIA is producing, they're more advanced, and they generate more heat because they work double time. So you need a different method like liquid cooling to have a more targeted cooling approach. And that's exactly what some companies that I've been researching are addressing. Some of those companies are Vertiv and Modine. Those stocks are up 133% and 125% so far in 2024. And these are more like mid-cap names, but they're still very large companies, and they're considered to be leaders in the industry.
Wow. Yeah, I'm looking at Vertiv right now.
Yeah.
Would you say 146% year to date?
So Vertiv is 133% so far, last time I checked.
Okay. I think it was wow, this is nuts. Yeah. Crazy. So it started the year, I'm trying to figure this out. Vertiv started the year at $45. So it's up to 112. That's pretty good.
It is. It is
pretty good.
Yeah.
Wow. But it makes sense, right? So And these facilities where all these computers lie, they're massive, right? These are hundreds of thousands of square feet of space. Is that right?
Oh yeah, they're huge. They have to
Huge.
accommodate a lot of technology and infrastructure to keep these things, working 24/7. But you have to control the atmosphere and keep it cool. So you need liquid cooling. At the same time, you still need air cooling. So a lot of the legacy air cooling players are still going to be good plays in this space.
Right.
But the liquid coolers are going to be growing much faster.
Got it. Okay. Cool. Wow, that's amazing. Yeah. So guess what that means? More electricity. Oh,
more electricity.
More electricity, more cooling, more AI. It just keeps running round and round like a hamster. I love it. Cool. All right, good. Did you see my cup, by the way? It's a Chicago Bears cup.
Oh yeah, that's a cool cup.
They won last week in London, so they're looking like a real team for once in 30 years.
Wait, what team is that?
The Chicago Bears.
Oh, okay.
Ever hear of them?
Yeah, football team, right?
Oh yeah. You don't even probably know the Philadelphia Eagles, and that's your hometown. My God.
I'm not too much of a football person, but
okay, we'll give you a pass then. My favorite part of the weekend is the Sunday NFL football season. Talk about needing cooling. Yeah, all those footballs. All right, cool. That's awesome. I love this stuff. So Google Antitrust, market sector was utilities. Never would have guessed. You could have given me a multi-choice there. You could have put tech on there, utilities, something else. I would have not guessed utilities, I don't think.
And yeah, the second one is financials, actually. So
really,
utilities, financials, and I think tech is the third best performer year to date.
Yeah, interesting. Okay, and I'm gonna keep an eye on this cooling and Vertivs. You said Modine, and then nVent you didn't mention, but it's in the notes. So nVent is another one.
So yeah, and I have an interesting statistic for these companies. So nVent is so they're all kind of mid-cap companies, which is right. You hear, in business news, you always hear the big tech, large cap companies. These are more mid-cap.
Okay.
But since a lot of them are tied to the hyperscalers, these companies that are spending billions of dollars on the AI infrastructure, think Meta, Amazon, Microsoft, Oracle.
Yep.
So all these companies, they're customers of a Modine, nVent, Vertiv, which is why their stocks are up so much. Modine, actually, they had an investor day on September 11th, and they announced that they're signing on a third hyperscaler. And after that, their stock soared to where it is now. So
wow.
And the stat that I wanted to point out is these companies are correlated with NVIDIA. So when NVIDIA stock sold off 10% in one session in the beginning of September, I think it was September 3rd, all these three stocks also experienced a 10% drawdown. Wow. So that's another thing to consider, that this sector is very volatile because it's tied to data centers and there's a lot of volatility in that area.
And the big gorilla in the room on NVIDIA's, they're tied to that too. Wow, interesting.
Yeah.
Actually, you said mid cap. What do you think of mid cap is? I don't even know. So I'm looking at Modine. It's about $7 billion, which sounds light, relatively speaking. nVent was about a little bit more, 12-ish. But the other one, the first,
Vertiv is a little bigger.
Yeah, Vertiv was more like $47 billion. That's a big one.
Yeah, Vertiv, they have the highest exposure to data centers in terms of their revenue. So they have 75% exposure to data centers for their revenue versus nVent is only 15% or 23%, I think. Yeah, something like that. Modine is actually a little bit more, I think, in between. So Vertiv is bigger because it just has the most exposure to the data centers.
Got it. Okay, great. Good deal. All right, that's awesome. I love it. I'm going to keep an eye on these now. It's a new place for me to go place trades. I'll think of something. I got to look at volatility, though, implied volatility, and then we'll come up with something. Maybe we'll bring it up next week. Well, good to see you. I know you got a cut, but great to see you as always. Happy Friday. Enjoy the weekend. Try to watch a little football.
Okay.
Try to watch the Eagles, all right?
I will. I'll watch the Eagles.
Okay. All right, Paulina. Great to see you.
Great seeing you too.
All right, next time.
All right.
Bye.
You know how the financial world goes. Here comes the buzzkill. Please make sure to take some time to read this boring disclaimer. We will owe you one.